Hey everybody, Boris. Welcome to the weekly technicals for the majors, Euro dollar, dollar yen, pound dollar for November 28th to December 2nd, 2016. The very big question in front of us now, after several weeks of just uninterrupted rally, is will the dollar rally pull back? Is the dollar due for a correction? And although it's extraordinarily hard here, because I know it looks all rosy in cheeks and everything looks to the upside on the dollar yen and to the downside on euro dollar, I have to believe that this is going to be the week of correction. We're going to be watching the technicals, of course, very carefully because there really isn't much on the fundamental side to kind of trigger us. We obviously have the non-farm payrolls at the end of the month, but I don't think, excuse me, at the end of the week, but I don't think those will really be a negative print. I mean, they may be a little bit softer, but I doubt that they'll be significantly worse. The thing about the upside at this point is that so much of the upside is kind of factored in that they would have to be just blowout numbers in order, I think, for the dollar rally to continue higher. The main stumbling block or the main fundamental excuse this week could potentially actually be Christmas sales. If Black Friday is relatively weak, if the spend isn't as strong as people think, regardless, you know, all of these numbers are always very inaccurate in the first couple of days of the season, but people tend to hang their hat on whatever the analysts are seeing. But bottom line is if sort of the channel checks don't show a major upswing in spending, if the consumers remain relatively muted, maybe that will provide the excuse for a dollar retracement. Mainly because the whole idea here is if there isn't this sort of massive uptake in U.S. growth, the Fed is not going to change its ways. The Fed is going to raise the rates in December and pretty much stay stationary for perhaps 3 to maybe as much as 6 months forward. So the whole yield curve in the U.S., which just exploded over the last 2 weeks, with a 30-year now above the 3%, is going to probably have to take a little bit of a pause and come back, and that in turn is going to very likely cause a little bit of a pullback. Of course, they could be very wrong. It's very, very dangerous to speculate about picking tops and bottoms. But when you're looking at the charts this week, there's just so much evidence, or at least so much empirical evidence, that we're due for a correction, at least a mild one, that I would suggest that that's a very strong possibility, and that's how I would be trading it at this point. And I guess my ultimate thesis this week is that the upside is pretty much done, and most of the opportunity profit and most of the risks is to the downside. So I would be selling whatever rallies we have in a dollar into the majors in the hope that it's going to be a correction coming in after 2 very, very strong weeks of the upside. Let's just take a look at the levels, and then I'll take a look at the charts with you guys. So euro dollar, the 105.50 has held, or sort of the underneath the 105.50 has held for a couple of days now. I'll show this to you on the charts. That's very, very key support. 105 is very key support. That breaks to the downside. A lot of my thesis probably gets shattered on the wayside. Similarly, the 114, 115 zone in dollar yen, very, very strong resistance. You'll see it on the charts as well. Again, that gets shattered to the upside. My whole thesis goes to dust. And cable showing relative strength. Cable actually is one of the trades that has shown relative strength. We've had, of course, the autumn statement in UK last week that provided a lot more fiscal spending, which should be positive for the UK. We have an overlay of all sorts of geopolitical stuff, but none of it really coming in this week. So in Europe, we have the Italian referendum coming in December 5th, so the week following. And it looks like it's going to lose now. So in many ways, it's already been factored in as a loss. So there's just only an upside here if they actually do pass it. It's very hard to say. They stopped polling 15 days ahead of the referendum. It's hard to say whether Renzi can mount enough of a rally here amongst his supporters to try to push the referendum through. And if he doesn't, certainly does put a little bit more downside pressure in the euro. But in the meantime, that's a week away. I still think there's a little bit of a jump here for short covering in the euro, at least the 107s. With the yen, really going to be how much more U.S. yields can go. If U.S. yields start to really come back down a little bit, and equities, the other thing is if U.S. equities just see a little bit of a sell-off after such a massive rally, all of that can take us down. Again, the things that will trip up the currency market are not things that are going to be predictable. Having seen these dynamics many, many times before, it is not the calendar that really provides any clue to how price action is going to be traded. It is something outside that we really can't predict, but we just sort of, I think, should be prepared for that unexpected negative twist or whatever negative excuse that comes in that knocks the price action, that provides the excuse for the price action to correct, which is really what I think is going to be happening. With cable, we have UK manufacturing and construction with the services numbers coming out the week after that. We'll have to see how well that's doing. Generally, UK data has been better than expected, so it should be mildly positive. But of course, we have the geopolitical, or sort of the judicial overlay of December 5th is when they begin to start hearing the case on the legality of the Brexit not being confirmed by the Parliament. There's not going to be any ruling for a while, probably not till next year. So therefore, I don't think it's going to have much of an impact on the pound. But the fact they're going to start hearing it should start to maybe have a little bit more influence on cable trade as we go forward. So let's just take a look at the charts here and see how everything is shaping up. The key thing with the euro, and the reason why I think we have a little bit of a bounce here, is we've had 3 straight days of essentially where we haven't made fresh lows. And that suggests, the way things kind of trade, or the way things sort of operate in any physical motion is, first you go forward, then you stop, then you go backwards. It's very rare that you kind of go forward and then you just stop on a dime and you have a V-shaped recovery. And this is basically saying to us that the sellers are exhausted. There isn't much more to sell at this point. Everybody's puked up their euros down to the 105s. And now perhaps the late sellers, the ones that came in at below 106s, can find themselves trapped. I mean, the short covering rally is always a function of trapping the late sellers and forcing them to quickly cover as we start to verticalize the other side. So at this point, 106.50 is the. As a matter of fact, I should really just let me see if I can zoom in on this. You can see this better. The 106.50 is the key resist point. If we can break that on a closing basis, 106.50, it's very likely that the bottom is very much in, and then we can be targeting 107.50 as the week progresses. That's really going to be the numbers I'm going to be watching for. Conversely, a further break below the 105.50, not just simply a test, but a break. In other words, we break the 105.50 and kind of really test the 105s. That puts a much more negative spin on the trade and really forces us to look at 104.50 as the other washout support from many weeks ago. So that's how the euro shapes up as far as the technicals go. The yen is sort of the opposite story, but with the 115 as the key level. Now, if I go backwards, you can see that this whole 114, 115 corridor, 1, 2, 3, 4, 5, or 1, 2, 3, 4, quadruple top essentially at this point. This is where we broke down in February, the big shelf, when dollar yen was trading 120, we took out 115, tried to come back towards it, died. And that is really where the big resist is going to be here. This 115 is going to be the big resist. If we can sort of hold between the 114, generally my view is if I was trading on a swing trading basis, I would be selling 114s, 114.50s, 115s with a stop at 116. At this point, if it clears 115 towards 116, you're clearly wrong. But you could have this just sort of one final spasmodic move. But I don't know if we're even going to get to the 114 level here. The fact that as I record this on Friday, we kind of died out. We tested almost the 114, kind of died out, and haven't really come back up above the 113.35, much less 113.50 level. Suggests that maybe we're going to start breaking down. Remember, the key thing with the yen is that once it starts to break down, it just starts to verticalize to the downside. I mean, it's very easy for it to do 100 points in an hour if it starts to break, as it starts to trip stops. So I think if we start 13, we can trip 112. If we trip 112, it really isn't going to stabilize until probably 111, and ultimately stabilize really at this big breakout at 110. So it's not at all inconceivable for us to see 2-3 handles of a move to the downside next week in the yen if we can catch that kind of a retrace rally. And then last but not least, on cable, you can very much see that cable actually looks relatively good. From a positive point of view, you have a series of higher lows and a generally upwardly sloping move here after this flash crash move. So cable here, the key thing is to take out the 25s on a closing basis. If we can take out 125 on a closing daily basis, it really puts us square up towards the test of the 120, 26, 27 level towards the upside. Conversely, a move below 23s really breaks this whole positive thesis and basically looks like a distributive top, and then it would come back and probably test the 122s as a big support level. So I'd be watching all those levels very carefully this week with the bias that the dollar rally needs to correct. And I think that this is going to be the week where the correction may begin to happen. Wish you guys the best of luck, the best trading. Boris, over and out.